The mortgage document signing appointment at FinancePath. Why is it important? Because a lot of banks, a lot of brokers, etc. won't necessarily go to the trouble of setting a separate appointment to go through the mortgage documents once the loan's been approved. We're a mortgage manager, right? So it requires us to manage your mortgage, but that doesn't just start when the loan has settled. It's before that as well. And we do focus on the mortgage document signing appointment for a number of key reasons. First and foremost, we want to make sure that once your loan has been approved and you're signing mortgage documents, you understand what you're actually signing. Whether you're a first home buyer or you've got a couple of investment properties in your own home, it's important to understand the key terms and conditions of the mortgage contract. Second thing is funds position. We call it funds position report. So especially if you're buying a new property or even if you're refinancing, it's really important to understand if you've got to contribute funds at settlement that you know exactly what you have to contribute. And you might, those figures might have changed from the start of the application process. So we use the mortgage document signing appointment as a chance to get back on the same page and understand exactly what you will need to contribute at settlement, or if there's surplus money from a refinance, exactly how much cash you're going to have left over. We also use the appointment to make sure that the documents are signed correctly. We don't want any delays at settlement, and one of the common reasons that we see settlement gets delayed is because signatures get missed or they get put in the wrong spot. Outside of that, it's a great opportunity for us to do two other things. It's to sit down and reconfirm with you the repayment structure, right? So how you're going to make your loan repayments. And that can be even broader than just the repayments. It's also the management of your income and expenditure. So we get on the same page with you to make sure that that gets set up the way that you want it, to make sure it achieves your broader goals, not just your debt repayment goals, but your broader goals. The other thing it does is it gives us a chance to again re-establish what those primary goals are for the first 12 months after your settlement. So as a mortgage manager, one of our key focuses and one of our points of difference as a business is that we've got a dedicated relationship management team that take care of you once the loan has settled, or even prior to that from this point forward. We provide a summary of those discussions and we share that summary of those discussions with you and with our relationship management team. Why do we do that? Because that's the conduit to make sure that when your loan does settle, our guys can set it up the way that you want it set up. If you're refinancing your loan, or even if you're taking out a new one, that first month after settlement, there can be some uncertainty around it. You want to make sure that things are set up the right way. So this summary ensures that our whole team is on the same page as you, and we put the right structure in place. One of the key things that we pride ourselves on is making sure that your loan facility remains the most appropriate and structured the right way for you, not just in the short term, but the long term. So we review your loan facilities as well too on an ongoing basis. But instead of just reviewing the loan facilities or reviewing the interest rate, our relationship management team want to make sure you get the most out of that conversation. So what we talk about is going, right, well, let's recap on what the primary goal was and make sure that you're held to account in some ways to say, yeah, okay, that was achieved or it wasn't achieved, and why. So why as a business do we do reviews? Well, when you compare us with say a bank, they don't really have a vested interest in you paying the debt down or achieving those particular goals, despite what they might say, because the longer your loan goes, the more money they make. If you talk about brokers, they have got a vested interest in reviewing your loan because they'll look to take you from red to possibly blue or to green, because there's an upfront income that they will earn every time they take you from one lender to the next. We don't sit in that category as a mortgage manager. We in essence are the same as the lender, so we're not looking to earn more income by taking you from one funder to the next. Our whole vested interest in doing reviews is to make sure that the loan facility that we've provided you remains appropriate and helps you achieve all of your goals without the need to do another application. Because we understand that at the end of the day, most people out there will turn around and go, well, if I can ensure that my loan facility remains competitive and appropriate for me, and I can save the headache associated with paperwork, will give me that option every day of the week. So that's why our loan reviews form an important part of the overall value that we offer our clients.